Hello everyone. We are going to continue with chapter 7, Dissolution of Partnership Firm, that we have been doing from past few lectures. Chapter 7, Part 1, Dissolution of Partnership Firm. This is the last chapter in Part 1. And so far we have completed chapter 3, 4, 5 and 6th chapter in order. Yes, and this is the 7th chapter, which is the last chapter in part 1. Yes, chapter 2 from this book, which is Final Accounts, is an important chapter and little bit difficult to understand with the medium of video lecture. So we are waiting for the school to reopen so that we can start with the study ahead. So that chapter will be considered during that time. So we'll continue with chapter 7 for now. In the previous lectures, we have learned about the theory of this chapter. In the very first lecture, we had introduction, then methods, legal provisions, then general procedure of dissolution. Then we have also learned about journal entries, how to prepare a realization account. While explaining journal entries, I have clearly said that these journal entries will appear in the practical sums of 3 marks. So the journal entries, all of them, are really important. The lecture previous to this and the previous lecture do that. Both these lectures consist of journal entries in it. Yes, journal entries related to preparation of realization account. So the journal entries that we have learned are extremely important. If you haven't come across, if you haven't studied the lectures of journal entries thoroughly, then it's not possible for you to understand the sums that we are going to do today. As I said, we are going to start with question 5 from exercise of this chapter. We are starting with exercise, and this is the first lecture related to exercise. You should watch till end for complete understanding. This is what I say in each and every video. Video lecture. Yes? So we are going to start with question 5 on page number 311 of your textbook. If you want to keep your textbook with you, well and good. Otherwise, we have everything presented on your screen. And the question says, pass journal entries for the following transactions of firm in the case of firm's dissolution. So we are supposed to write down the journal entries during the time of firm's dissolution. That means the end of existence of a firm. The firm is going to end. The dissolution of firm is going to take place. Yes? And what are the accounting effects during the time of dissolution? We have already understood really well in the previous lectures, along with theory and journal entries. Yes, so on the basis of that concept, those theory concepts, and on the basis of journal entries, we are going to solve this sum. Obviously, you know the meaning of firm's dissolution. The firm is going to end. So what is the very first thing that you will do? You will close the accounts of all the items. Let it be assets, liabilities, reserves and provisions, etc., etc. You are going to close the accounts of assets, then you are going to sell those assets. The amount realized thereof will be utilized for the payment of liabilities. And the payment is made in an order. The very first step of payment is the payment of dissolution expense. Then payment towards third parties. Then the loan of the partner is repaid. Yes? Then the amount of capital or current accounts, and still if there is any surplus, will be distributed among partners in their profit sharing ratio. Alright? Fine. Then I repeat, the journal entries that we have learned in the past few lectures, 2 lectures that we have learned, we have understood the journal entries will be applied practically in this sum. Alright? So we'll read the question once more. You are supposed to write down journal entries for the following transactions of firm in the case of firm's dissolution. Let us see the very first question. This is also given in your textbook. They say, at the time of dissolution, the book value of goodwill is rupees 56,000. Further, they say no amount is realized. First of all, whenever you solve this type of sums, it is compulsory for you to prepare a format of journal, and in that you will write down the journal entry. Firstly, goodwill is an asset. Yes, and as I said, all the assets are closed and then sold. Goodwill here is an intangible asset. Yes. So the first journal entry will be about closing the book value of goodwill. Let us see the journal entry. Okay, here it is. I repeat that you have to prepare the format of journal for writing down journal entries. Obviously, you know what is the format of journal. The journal entry presented on your screen is to be written in the format of journal. Date, particulars, LF, debit and credit. Alright, so the very first journal entry is realization account debit 56,000 to goodwill account 56,000. This is the journal entry to close the account of an asset. Which asset? Goodwill. If you remember, we've understood the journal entry for closing the assets account and transferring it to realization account. Yes? And if not, then please revise all the journal entries, only then study this lecture. Otherwise, you are going to be that God alone knows, ma'am, what is ma'am teaching. Yes? So make sure you have studied previous lectures from your side. before you complain about anything. So, as I said, assets realize some value. At the time of dissolution, all the assets are required to be closed and sold. So, 2 journal entries for closing, for realization. Goodwill is an asset having 56,000 rupees value. The account of goodwill has been closed with this journal entry. This is the journal entry for closing goodwill account. This can be the journal entry for closing any asset account. If it is building, then it will be realization account debit to building account. Yes? So narration, being goodwill account is closed and transferred to realization account. Narration is not that hard. You can write it on your own. You should study how to write narration you can study in illustrations that how do they write narration. Obviously then narration is to be written on your own. Yes? It does not require any preparation. You know what narration is. Yes? So while you solve illustrations, go through the narration so that you will get an idea how to write it down. The second journal entry, they say no entry is made for its realization. Why? Because the question says no amount is realized. While closing an intangible asset, when no amount is realized, then its realizable value is considered to be 0. And in case of tangible assets, the book value is realized. Yes? Here they have clearly said that no amount is realized. So there is no journal entry for realization of an asset. Let us see the next question. The second transaction in question 5. In the balance sheet, land and building rupees 8 lakh and investments of rupees 2 lakh are disclosed respectively. Respectively rupees 9 lakh and 1,50,000 are realized from them. Okay, the balance sheet consists of 2 assets, which is building and investments of rupees 2 lakh, of rupees 8 lakh and 2 lakh. So this is their book value and this is their realizable value. Let us see the journal entry for this. I repeat, you will prepare the format of journal for writing this down. The first journal entry, of course, is about closing an asset account, closing the accounts of an asset. It says realization account debit 10 lakh, to land and building account 8 lakh, to investments account 2 lakh. The first journal entry is for closing an asset account. The journal entry to close the accounts of an asset is realization account debit to sundry assets account. This is the journal entry for closing assets accounts. So which are the assets in the given question? It is land and building and investments. So realization account debit 10 lakh, to land and building 8 lakh, to investments 2 lakh. You can also write the separate journal entries for this, such that realization account debit 8 lakh to land and building account 8 lakh, then realization account debit 2 lakh to investments account 2 lakh. But instead of writing two journal entries, to make it simple and easy, one journal entry has been written here, single journal entry, because in both the journal entries, realization account is debited. Yes? So instead of debiting it twice, it is directly written in one journal entry. And the narration says, being assets accounts are closed and transferred to realization account. Now they say that 9 lakh and 1 lakh 50 are realized from them. So overall 10 lakh 50,000 are realized from the sale of assets. And the journal entry for realization of assets is, we have understood this while understanding the concept of journal entries. What is the journal entry for the amount realized on sale of an asset? It is cash and bank account debit to realization account 10 lakh 50,000. How? 9 lakh plus 1 lakh 50,000. Alright, let us see which is the next question. It says total assets of firm are rupees 2 lakh, out of which 40% are current assets, which includes cash of rupees 10,000, and they say book value is realized. Let us see. The first journal entry for closing down the assets account. You know this very well by now. Realization account debit to fixed assets account to current assets account. What is the value of fixed assets? Book value. Okay, let us understand here. Total assets 2 lakh, which includes fixed as well as current assets. Out of this, 40% are current assets. So firstly, what is the 40% of 2 lakh rupees? It is 80,000. And further they say that current assets, which are 40% of 2 lakh, which is 80,000, includes 10,000 as cash balance. Now, if you remember a point highlighted in the previous lectures, that cash and bank account is never closed and transferred to realization account. Yes? So while closing down all the assets, all the other assets, we are going to exclude the value of cash from it. So when you will close down current assets, out of 80,000, 10,000 will be deducted and only 70,000 will be closed. Understand the journal entry. Realization account debit 1,90,000 to fixed assets 1,20,000. How do you get to know what is the amount of fixed assets? If out of 2 lakh 40% are current assets, then obviously fixed assets are 1,20,000. 2 lakh 40% is 80,000. So 2 lakh minus 80,000 gives you 1,20,000 rupees. So remaining is the amount of current assets. I repeat, 2 lakh 40%, 80,000, 2 lakh minus 80,000, remaining is the value of fixed assets. Total assets are 2 lakh, out of which fixed assets are of 1,20,000. Current assets are of 80,000 actually, but it includes 10,000 for cash. So which is to be excluded because at the time of dissolution, the amount of cash and bank is not closed and transferred to realization account. Alright? So 70,000 here. 1,20,000 plus 70,000 gives you 1,90,000. This is the reason it is written 1,90,000 here in realization account. You can also write down the separate journal entries for this. as I've taught you in the previous transaction. In transaction 2 about land and building and investments. But it is better if you write down the combined journal entry. Narration. Being assets accounts are closed and transferred to realization account. Narration you can easily read in the illustration and understand. That is the reason it is not written here. Obviously, writing down narration is not difficult. So when you will be doing the homework sums, which are of illustrations, you will write down narration along with that. So while solving sums, you will be able to write down narration in same manner. Now, 1,90,000, book value is realized. Book value is this: 1,20,000 for fixed assets, 70 for current assets. So, journal entry remains same for the realization of assets. It says cash and bank account debit 1,90,000 to realization account 1,90,000. Book value, that means the value which is here. Book value is the value considered at the time of closing the accounts of assets, the one which is presented in balance sheet generally. All the time. Okay, and the journal entry for realization of assets always remains same. So this is the journal entry for realization of assets. This is the journal entry for closing down assets. Assets are to be closed down always at a book value, and here the realizable value is to be considered, but they say the realized value is book value itself. So again, the book value is considered here as a realizable value. Alright, hope you are able to understand. Let us see which is the next transaction. It says goodwill is not disclosed in the book, but rupees 50,000 are realized during dissolution. Okay. Goodwill is an intangible asset. It is not disclosed in the balance sheet. It is not disclosed in the book. So what is this? This is an unrecorded asset. And they say 50,000 are realized during dissolution. So this is the journal entry about when an amount is realized for an unrecorded asset. Let us see the journal entry. 50,000 they said it is realized. So the journal entry for realization is presented here. Cash and bank account debit 50,000 to realization account 50,000. Being 50,000 realized for goodwill. Now the question arises is that why we haven't closed goodwill account. Yes, the way we are doing in each and every transaction, that is realization account debit to asset, which is land and building, investment, fixed assets, current assets. So similarly it should be the case here. But you see, this is an unrecorded asset, not disclosed in the book. If it is not written in the book, how do you close it? Yes? So the journal entry for realization of unrecorded asset, which is not disclosed in the book, is only one journal entry of its realization. So the assets which are not recorded, the journal entry for closing that asset account does not appear. So there is only one journal entry for this, and it is for realization of that asset, which is cash and bank account debit to realization account. Okay, the next transaction, it says the value of laptop is 35,000. One partner has taken it for 25,000. Laptop is an asset, of course. So the first journal entry that you are going to write is the closing entry. Closing entry for an asset. It is realization account debit 35,000 book value. 2. Laptop account 35,000. Again, I repeat, this is the journal entry for closing down the account of an asset. Realization account debit to laptop account 35,000, the book value. And then second journal entry, it says partners capital account debit to realization account 25,000. This journal entry is about when an asset is taken over by the partner. If you remember this topic, we have understood the journal entry for what is to be done when an asset is taken over by the partner. Yes, so the journal entry was partners capital account debit to realization account. Here the name of the partner is not mentioned. This is the reason it is written this way. So whosoever the partner is, his name, and partners capital account debit 25,000 to realization account. Yes, so almost this journal entry is also similar to the previous transactions, but the only difference is that instead of writing cash and bank account to realization account, you have written partners capital account instead of writing cash and bank. Why? Because this asset is taken over by the partner. And this journal entry we have understood while understanding the concept of journal entries, isn't it? So now you know how these journal entries are useful in practical sums. Yeah? Alright. So we have completed 5 transactions from question 5. Let us quickly revise. We have started with question 5 and we have completed almost 5 transactions which are extremely simple and easy to understand. So here we end our session for today, and let us see what is your homework. You are going to write down all the 5 transactions taught in this lecture in your fair book, and also you are going to solve illustration 1. In that, question 1, 2 and 3, which are similar to question 5, the transactions that we have solved today. And we have several important notes here. You will draw the format of journal while writing down the journal entries. Of course, I have instructed this in the beginning itself. And you will go through narration written in illustrations for understanding how to write the same in sums. Also, this is instructed in the beginning. Yes, so make sure that you go through the narration for once at least. Then you will be able to write it on your own. It is clearly given in the illustrations. And this is the homework for today. I repeat, you will solve question 5, the transactions that we have understood in this lecture, and from illustration 1, 2 and 3. These are similar to the transactions that we have understood and we have learned in today's lecture. Alright? Please go through the topics of journal entries in the previous 2 lectures for solving the sum that we have started in today's lecture, which is question 5 from your exercise. In the next lecture, we are going to continue with the same sum from transaction number 6. Till then, please revise journal entries and solve the 5 transactions that we have understood in today's lecture, and also solve the sums from illustration. So we'll see you all in the next session soon. Till then, stay home, stay safe and study well.